Welcome to We Build Great Apartment Communities, the only show dedicated to the process and strategies for transforming apartment buildings to thriving communities. I am your host, John Brackett, and welcome to the show. Hey, everybody, and welcome to the show. Welcome to We Build Great Apartment Communities, the only show where we talk about taking apartments and converting them into amazing communities. So I have here a special guest, Jorge Abreu, someone who I think you're going to find to have a fascinating background in this business. I'm going to share with you his bio, his history in this business, but I think this is going to be a very unique show. And one of the reasons why I say that is this is someone who's flipped over 100 homes, who's also has been in the wholesale business and has wholesaled over 200 properties, owns a construction company that services investors, and on top of that, is a GP on 1,700 plus units, and also on the LP side, the limited partner side, he's an investor in over 1,400 units. So I think this is going to be a great show, some very unique experiences because of all of those business dealings. So George, welcome to the show, man.
Thank you, man. Thank you for having me.
Yeah, you're very welcome. So I have to ask, okay, how in the world did you go from, flipping to wholesaling, and then the transition to multifamily is I think it's a pretty natural transition, but which did you do first, flipping or wholesaling?
Started with wholesaling. Wholesaling some single family homes, and then started fixing and flipping, and then did a couple holds, some smaller multifamily. But mainly where I found my space was the fix and flips. So we started averaging about 40 to 50 homes a year at the high point.
Right. So how did you, it sounds like you really, with the wholesaling and the flipping, you've had to have created some really good systems to be creating that kind of throughput, right?
Right.
So
Yeah.
can you talk a little bit about that? Because I have a feeling that that's probably one of your strengths, and it's probably one of the reasons why you've been able to grow so quickly with your number of doors. So talk to me a little bit about the systems that you created maybe in your flipping business when you first started.
For sure. I mean, I've got an engineering degree, and I'm always looking at how to do things more efficient, to get more out of myself and our team.
Sure.
The more efficient you can get a task done, the more you can do. So as we started building the fix and flips, I was constantly putting in new systems, whether it was, how we look at our deals and do our due diligence, from just checking off boxes to, once we got a deal that we're going to close on and fix, then, a checklist of, okay, what are we looking for as far as the rehab? What are we going to get done? We had our standard finish outs for the most part. We did start getting a little more custom, and at that point it's hard to have the standard finish outs, but so pretty much from beginning to end, creating a system so that it kind of just flows. You get a deal, goes through the workflow, and same result every time.
Awesome, man.
The idea.
Awesome. I really appreciate that. So when I looked at your resume, I had a strong sense that was probably one of your strengths, just because of just the progression, right? I saw the wholesaling, I saw the flipping, and then I saw, all these doors. So what was the greatest lesson learned that helped you make that transition and to grow so rapidly in the multifamily space?
I think it was having a team. I learned early on that there's only so much you can do as an individual. So when I entered into the multifamily space, I went in with the mindset that, okay, I was going to do this with a team, and the goal was to scale. So from day one, that's what I was focusing on doing, and that's what kind of helped me be able to scale and get to a certain amount of units as quick as I did.
So can you talk a little bit about your team and what you feel are the key components that allowed you to make that transition smoothly? So for our audience out there, to put this into context, right? Because when we start making investments, and when I say we, I'm talking about all of us, our audience, you and I. When we start making investments, especially in the commercial real estate, the game changes a little bit. And of course, the larger the asset, typically the more due diligence that's required, right?
For sure.
And of course, the loan dollars get a little bigger, the total capital requirements get a little larger. So team pretty important, especially when you're syndicating out assets, right? Depending on if you're doing an offering or you're looking to take those assets down individually. But talk a little bit about the team component and what about your team component or model do you think is the most critical in creating that ability for you to grow or scale?
I think the most critical is probably laying down the foundation. It's unreasonable to think that you're going to jump into this and have a team of 20 and have everybody just focused on one sector, and it'd be great, but I mean, obviously you've got to grow into that. So I think the first thing is laying down that foundation and separating the responsibilities, whether you're going to be wearing several hats and doing acquisitions and raising capital and asset management. That's fine if you're going to be wearing all those different hats, but still have a system for each and be able to take on and off that hat as you need. And that way, as you grow, you can easily bring someone in and have them start taking those functions.
Sure.
But if you're just going at it, day by day and grinding it out, which is what I learned, in the beginning, that's what I was doing. I'm a workaholic, and I would grind and I wouldn't really have a system for everything. It was just go, massive to-do list every day, and knock it out. But once I realized that, okay, well, that's only going to take me so far. I've got to be able to step back and kind of work on the process and put some time more into the business or on the business versus in the business. And that's what helped me grow. That's when I started doing that.
Man. Awesome. So which if I heard you correctly, it sounds like building out the systems is really a critical component to be able to then add people to the system instead of bringing people in and then figuring out how to build systems around the people. It sounds like, I made that mistake before, which is why I smile when you say that, right? And the byproduct of that was, I was letting go really good people because I was a horrible manager. And they were good. They were really good people. In hindsight, okay, I just didn't have the systems in place, right? It's either process or people, and in my case, it was really process. And I didn't have strong enough leadership skills to be able to make the distinction between the two. But man, it sounds like you figured that out at a very early on in your transition, and it sounds like that's really helped drive a lot of your growth, right?
Yeah, I mean, I wish I figured it out earlier, but yeah.
So if we were to break down your systems, right, into the four components in this business: acquisitions, financing, management, and dispositions, what area do you believe, what systems do you believe are probably the most important when you're starting out to be able to create the kind of leverage that you did? Where would you start first? If you could do it all over again, what systems would you create first?
I mean, I would have to say acquisitions. Without a deal, you don't have anything.
Right.
But I'm also a strong believer in you just can't acquire a bunch of properties and not be able to manage them or execute on your business plan, because that's going to be that's going to be horrible.
Right.
You're just going to create a big old mess. So, I would say definitely acquisition is the first thing, but you've got to have in the back of your mind, or you've got to be working on it already, is how you're going to manage all that once you start getting the deals.
Sure. So can you talk a little bit about the systems inside of the acquisition process that you've created that have given you the most amount of leverage? I'm sure maybe due diligence might be one of them, but can you talk a little bit about that so our audience, they gain perspective a little bit around what has made you so efficient, right, and successful? Can you give a peek into kind of
For
that?
sure, for sure. So, I mean, in the beginning, we wasted a lot of time pretty much looking at every single deal, going through the whole process of, underwriting it and going deep into each deal. And it wasn't until a little bit later that we started getting a little more specific on our criteria,
Right.
on our locations, and then what exactly we were looking for. What was our ideal deal,
Right.
and expressing that. So when a broker sends me a deal, I don't instantly start looking into it. I've got certain questions that I want answered, and I send them those questions, and I make them do the work. If you do that from day one, some brokers may tell you to, may not even respond to you and ignore you. But I guess after I closed a couple deals and got that credibility, they get it. So they send me that right away, and the answer to those questions lets me know if it's worth going to the next step. So kind of creating little barriers to move the deal along, and not getting all the way to the end and going, okay, this deal sucks.
Yeah. So some targets, right? So can you give an example of what some of those questions might look like?
Yeah. A simple one is obviously the price per door, and then the average rent per month. Those two things right away let me know kind of where the deal's at as far as pricing. Like to use the 1% rule on that. And other things other than those two is so what they think.
So 1% rule, George. I just for our audience, can you elaborate on what that is?
Yeah. So if somebody's asking for 100,000 per unit, and what I was saying, and the rent's 1,000, that's 1%. Then anything under that, so anything under 100,000 at 1,000 per month rent, starts to look good.
Sure.
If they're asking 80 per unit, 80,000 per unit, and it's 1,000 per rent, then it looks interesting. The numbers, and I can't explain it to the T, but it works. It's something that
I understand what you're saying. So let me kind of recap, okay, for our audience. So it sounds like you're setting up some thresholds that not only you use for yourself and your company, so that you guys are not, chasing everything, but rather you're chasing a very specific criteria to create efficiency, right? So you know how to spend time and energy. Okay. Now, the 1% rule, it sounds like a threshold that you use so that you can determine what kind of upside there is inside of that property, right? So anything below that 1%, you can evaluate with some degree of efficiency, okay, how much upside there is in this deal, and how much time should I devote to taking it to the next step?
Correct.
Okay, awesome, man. That's I like that. I've never heard it put in those terms, like the 1% rule, but man, that's actually, especially around a per door number, right?
Right, right. So I mean, it's something in single family. It's very known in the single family realm, but we tested it with the deals we've done, and it made sense. The numbers worked out, so we've kind of ran with that, and then other certain things. I want to know a little bit more about if it's a new area that we haven't. Checked it off as an area that we want to be at for sure. I want to know a little bit more about the population, the growth, the jobs. What's driving the economy in that area. Trying to think of what else is in that set of
What do
questions. You
you
got
look for when you're looking for jobs, right? Because every market's different. Every market has different industry. So when you're making an acquisition or studying a new market, are you buying within a specific radius based on number of jobs, total population? What do you look
yes.
for inside of
I
that?
like to see 100,000 and more as far as total population. We like to see a trending population growth.
Sure,
How much that is. I don't have an exact number. I want to see it trending up.
sure.
Um, as far as jobs, I want to see that it's diversified. That it's not just one sector which is, would have played huge into the pandemic we're in now. If you would have,
Yeah, good point. Great point, man.
if you had an apartment that was solely on entertainment, as far as the jobs and the residents that live there or the economy, you'd be hurting more than others in this instance.
Sure.
So same thing with like military. We don't want it to be 100% driven on military in case they get deployed, and obviously that would affect the apartment. So yeah, things like that.
Okay, great. So I'm gonna move into due diligence.
Mm-hmm.
Okay. And I think it's going to be a great compliment because you also manage a construction company. And I know due diligence and acquisitions are among your strong points, right? Especially with your engineering background. So talk to us a little bit about, George, about why did you start a construction company? I think it gives you a huge advantage. But can you talk a little bit about the why behind the business and how it dovetails into what you do now?
Sure. I mean, it started. I wanted to scale the fix and flips, right? And we were having trouble finding a contractor, or at least a good one.
Solve your own problem,
Yeah.
huh?
And I mean, at one point, I had experience. I had worked with my uncle that owns a construction company uh, through college, and I got an electrical engineering degree, but the job I took after college was with UPS in their engineering department, and it was more of a GC. I helped I managed the additions to the warehouses, or if the roof needed to be replaced, or anything like that. So it was more of being a general contractor for UPS. So I took that experience and I started the construction company. And that really helped, same thing. I was able to put in my systems, my processes, and that way I knew when we got a job and it needed $100,000 in renovation, that it was going to get done right. It was going to get
Right.
done on time. It was going to get done within budget. So it gave me more control. Same reason a lot of syndicators or multifamily investors bring their property management and also construction in-house, to have more control and be able to put in those systems.
Man, where do you think that has given you the greatest advantage in your multifamily business?
Yeah.
What have you been able to leverage from construction to make you better at acquisitions, for example, make you better with due diligence? Because I've learned, and we did the same thing. We brought management in-house for the same reasons, but we've been able to leverage all the learnings from management, our systems, our process, our accounting, our metrics, right, to make us better at acquisitions has been huge, because we
Nice.
can go into a property, especially looking at a P&L, and I can determine really quickly, how far this thing is off metric, and how much can we improve realistically without adding, fluff to it, right? Without thinking that I'm going to outpace the market.
Yeah. Yeah.
And then run into some major problems like in a market like this. So can you share how you've been able to take, or what components rather of your construction business have you been able to leverage into your multifamily on the acquisition side to give you an advantage?
Yeah. I mean, I think the advantage comes in where we feel a whole lot more confident in our CapEx numbers. So a lot of investors really just throw a number out there, $6,000 per door or 10,000 per door, whatever. And they set their budget just by kind of feeling it out. The approach we took was during our due diligence. I mean, by the time we're done with our due diligence period, we know exactly what it's going to cost us, exactly what it's going to take. There may be some contingencies in there, like we may not know exactly how much the plumbing repairs are going to be, but we know if there's going to be big issues or not.
Right.
So that lets us be a little more aggressive with our pricing, or at least on that end, knowing exactly what the CapEx is going to cost. And the other advantage is, past the acquisition, like I said before, I feel confident that we're going to execute the business plan and get it done.
And then how are you guys changing your underwriting in this market, or what adjustments are you making to your underwriting? So you have the CapEx dialed in because of the construction side, right? Right now we're going through COVID-19, right? We're in a pandemic, very unique market, because the way that I explain it is the challenges that we're facing right now, not driven by traditional supply and demand economics, right?
Right.
The demand issues that we're having right now are because you just don't have as many people out there in the marketplace spending money, which is really very interesting to me.
Yeah.
So
it has a lot to do with the unknown too, I think.
It has a lot to do with the unknown, right? The uncertainty. So for that reason, great segue. What adjustments are you making in your underwriting to account for that unknown risk?
I mean, we're making a lot of adjustments. So our main focus has been heavy value add deals, and the financing on those deals has become very difficult. You've had to get pretty creative if you want to close on those and come in with more equity. So we even changed, at least for this time period, the kind of deals that we're even going after. And then, a rent bump or any type of rent bump, we're being really conservative with what we're putting in there. It would have to be drastically under market for us to actually even put a significant rent bump in year one, or maybe even year two. But I think those are the two main things. So we're going for higher occupancy deals that, the yields are maybe going to be a little bit lower right now, versus what we were going after before.
Sure. And is that a function of being able to bring financing to those deals? Is that the strategy behind the occupancy? Or
yes.
Okay. So what are the financing problems that you're running into right now, just to give our audience some perspective, right? Because you have a really unique background in that, you finance a lot of deals a lot of different ways, right? From wholesaling to flipping to now, value add multifamily deals, also with a construction component. So how is the financing changed for you? And, what are you guys doing differently to compensate for that?
I mean, most of the deals we've closed on have been with bridge financing, because the occupancy has been under 90%. And the bridge lenders right now there's very few that are still active. Some have come back into play, but LTVs are pretty low. Rates have gone up on their side. So that's made it pretty difficult on these deals. So that's where we've been working a lot on building more large equity partnerships and relationships to kind of fill that gap.
And so what would be an example when you use the word large equity partner relationships? What does that mean? Does that mean, finding other investors out there to co-venture with? Does that mean, family offices that are cash rich right now? Can you elaborate on that a little bit?
Yeah, I mean, to keep it kind of simple, it would be, somebody or a fund that's willing to write a $5 million plus check and take care of a good chunk of the equity we got to raise.
The equity requirement. Nice, man. Nice. Well, hey, bud, I'm gonna transition to our closing segment, right? So we talked a little bit about strategy. We talked about some of the tactics that you use, which I think is great. You shared a little bit about some of the greatest lessons that you've been able to take out of this business and apply, which is huge value for our audience. And now I'm going to get into something that you're probably going to enjoy the most, which is talking about your favorite, component of this business and why,
Okay.
right? Every investor that I've worked with, that I've come across, there's something that they absolutely love about this business, and they can explain why because of the passion that they have around it, right? It's usually an experience or something that has triggered that. So what do you love most about this business and why?
Yeah, so I mean, it's probably going to be obvious when I say it, but it's the transforming the properties, taking this community that for whatever reason, the owner has not been putting money into it and has been letting it kind of fall apart, and be able to come in there and just add value to the community, fix it up. And then, I love comparing the before and after pictures.
Sure.
I love seeing the reaction of the residents. I mean, I don't know how many times we're walking around checking on our CapEx, and the residents just come up to us and they thank us, and they're really, I remember one time, this was pretty recent in Houston. It was pouring, and we still had to walk it because we're with the lender, and a resident came out in the pouring rain and ran after us just to tell us thank you, thank you for doing everything we had done.
Interesting.
So I mean,
yeah, it's always a good feeling, right? Well, I really appreciate you saying that. And that's, one of the reasons why we invited you on this show is your commitment to, I think, taking, an average apartment community or an average apartment building rather, and converting it into an amazing community, right? In your case, you have some very unique processes and experiences that allow you to do that probably a lot more efficiently than most. But the end result is that value that you bring to the community. So for that, we want to thank you, for participating in the show. Great show. Tons of nuggets there. I mean, I literally filled up a half a page. So
nice.
if anyone has less than that, they just weren't listening.
I like it.
So George, I really appreciate you being on the show. How do people get a hold of you? They want to reach out, learn a little bit more about what you do, what you're investing in, how to participate with you. What would be the best way to do that?
Yeah, we've got a bunch of content and things they can check out on our website, which is Elevate CIG, which stands for Commercial Investment Group. So elevatecig.com. If your audience wants to send me an email at George, it's JORGE at elevatecig.com. I've got a bunch of checklists I can send them, stuff that we use, systems that we use in our business, anywhere from due diligence checklist to questions to ask a sponsor before you invest passively, and I got a couple other ones.
Well, I'm gonna be one of the first to send you
Hey,
my
man.
on that, man.
For sure.
It's really funny, right? In this business, I always tell people that when you stop learning, you stop growing, right? And
For sure.
so I've always tried to approach everybody and every component of this business with the mind of a child, because when you have a lot of humility, you still are able to absorb, right? The minute, and of course I'm guilty of this, and I was not so much anymore, but when I was much younger, there were certain things that I thought, man, I just absolutely knew, right? Like there was no need to know anymore. And then the end result was, some big losses. I call them expensive seminars.
Yeah, I've had a few of those, but I always tell everybody, man, you got to be willing to learn. You got to be really open to learning.
You really do. And so, for that reason, I really appreciate you coming on and not only sharing what you have, but also being willing to provide, content, right? Additional content, especially the checklists are huge. Because they may not be able to apply them to every deal. However, there's always something that you can take away to improve your own process, right?
For sure. Yep.
So for that, really want to thank you. Thank you for being on the show, man. You've been a gracious host or gracious guest.
Thank you. You've been a great host.
Appreciate it. Clarity of purpose creates our greatest competitive advantage. When we transform apartment buildings to thriving communities, we improve how people live and create assets with high profit margins. Don't forget to subscribe, like, and share this up with a friend. I'm John Brackett, bringing you things you can implement right away.